Friday morning, early. It's only 5:40 in the morning here, but I think I'm done for the day. Took three trades, and I think I'm happy with the result, and I'm just going to stop. So let me just explain everything that happened this morning and what I'm doing now. So currently, right now, I've reduced my risk unit to 250 bucks. I'm trading off my Lux account, and the reason I'm doing that is because I've been blowing accounts right and left lately, and I just don't want to do that anymore. So I'm gonna start getting a tiny little risk unit, and I'll probably bump that up, in the weeks to come. But for the next, few days or maybe a week or two, I'm just gonna be doing 250 bucks, and I'm gonna be perfecting my setups if I can. So, and the reason I'm doing such a small risk unit is because I want to eliminate all of the emotion from my trading and simply use pure analysis, if possible, um, to just trade better and then, kind of bump my risk up as I go. So basically, where I'm at right now is that I'm trading today. I was trading off my Lux account. I use MT4, doing my analysis on TradingView, and then I'm doing my actual execution on MT4. The prices don't exactly line up, so I have to do some different kinds of calculations. But I'm kind of teaching myself how to do that, and so that's what I'm up to there. My Lux account is a $200,000 account. I'm at about 206,000 right now. I need to hit 212 as the next target, halfway to that target. So today's trades, I'll just go through them real quick. This is the Nasdaq 100. I noticed overnight we went into a trading range. When I woke up this morning, we were in a downtrend. When I turned my computer on, what I saw was this downtrend. This is a 15 minute, this is a 5 minute, this is a 1 minute. When I turned on my computer, I saw this downtrend, and I said, okay, well, I saw this smart money zone here on the 5 minute, so I overlaid that onto my 1 minute with my Fibonacci levels, the 61.8 here, green, the 50% here in the red. I went ahead and watched for a bounce off this level, which was also the level of the 5 minute 200. I saw this buyer's wick come in, so I bought it. I had to stop way down here because I was in a downtrend and I didn't totally trust this to bounce. It did bounce nicely. I did pick the exact bottom, but I didn't trust it very much, so I had my stop way down here. Thereby, I made my risk unit much larger, so I didn't quite get to an R before it turned around and wicked me out at my entry. So that was a break even on the first trade. So then I just watched price action kind of chop around. I saw some volume come in here, didn't know what that was, didn't worry about it. Waited for the fast cross of the 8 over the 20, which happened right here, and then waited for the first real pullback, which happened right here. Let me just circle that for you real quick. This buyer's wick right here, I bought this one. This time I had a tighter stop because I was in an uptrend, and I trusted that this buyer's wick would hold. A higher probability trade, a higher probability that this buyer's wick would hold. And sure enough, it just went straight up and hit my 1R target. So that was 1R right there. Then I saw a whole bunch of volume come back in again to the market, and I saw this buyer's wick, but this prior seller's bar was huge compared to everything else I'd seen except for this one over here. So I was a little bit mistrustful of this buyer's wick and decided to skip it. Turned out it was a pretty nice little run up. Probably was easy 2R winner, but 1.5 to 2 hours, but I skipped it and instead waited for the next one. So the next one didn't take long. I calculated it was right here, and one of the reasons I calculated that, there was a couple things I was looking at. The body of the candles bounced off the 20 here, and it came pretty close to bouncing off here. Also, you could look at it and say it was a uptrending channel. You can also look at it and say it was an uptrending inverse head and shoulders with this kind of pattern right here. So there's a lot of things about it that I liked. I went ahead and bought it right here, and it kind of came up real quick, and because I had this swing low up here, I thought, let me just sell it at this swing low. So I actually bought it here, sold it here. It was almost 1R, like about 80% of 1R. So between the little bit better than break even on the first trade, the full 1R on the second trade, and the almost 1R on the third trade, I had just about 2R for the day. And I figured, if you have 2R in your pocket, I mean, hey, you're good to go. So I'm turning off the computer. I'm going to go live my life, and have a good day. Might even go back to bed. I don't know, but reducing my risk today to a bare minimum, $250, was an exercise in um, uh, taking 2R out of the market. I'm not here to make money today, or as long as I'm doing $250 risk units. It's not really the money so much. It's trying to just get a little bit better accuracy, consistency, proper risk levels, and proper frequency. So I think today hit all those marks, all those targets. I think I was accurate. I think I had a nice low risk level, too low, but that's okay. I'm just practicing with a lower risk level to eliminate motion, and I had a low frequency. So I hit pretty much everything I wanted to do today, and I'm going to continue to do this until I get funded on Lux. Lux has a doubling program where every time you get 10%, they'll double your account size. So I could do, tiny little risk units on $1 million account, and still make really good money, like a couple grand a day for 2R. So those would be like a 5% of the max drawdown per risk unit. So anyway, I'm just going to go ahead and sign off for now. Hope you have a great weekend, and that's what I'm up to right now.